We are seeing encouraging signs that maybe stock market investors are finally starting to figure this out, that there will not be some type of a softish landing or even some type of a no landing, that its CPI is not going to go negative in 2023, which many people actually said it was going negative, and they bought bonds last month and stuff. And I'm still waiting on buying bonds because I'm looking at the inflation picture. But so far, it doesn't really look like it's going to go negative in 2023 or even to 2% in 2023, which is really bad for stocks in general. And again, we talked about this in my video 2 weeks ago when I said the trap is set and a blow-off top is in the making. And this video got pretty close to 6,000 views. Now, the main reason it got 6,000 views and this video is not going to get 6,000 views was because 2 weeks ago we were going up on the S&P 500 and most people were actually seeing videos of some type of a new bull market, and my video and some other people that were more rational actually made different type of videos saying the opposite. Now, why were people calling for a new bull market? Because stocks went up. Whenever they go up, they follow the market. They say it's a new bull market. If we do break down to 3,700, 3,800, they're going to make videos that this is going to be worse than the 2008 financial crisis, which is the reason why we pay attention to facts and try to ignore the noise in the market. But we sadly had a lot of noise, and it has been pretty funny to watch. Like, this is a meme with Nvidia, and I have nothing against the company, but I believe it's overvalued. But again, looking at Nvidia, they had pretty much 20% decline in revenue, decline net income, free cash flow, inventory up 100%. But then you said Nvidia.ai, that talking about the AI opportunity, and then they said before Bitcoin mining opportunity and all that type of thing, and it helps pump the stock up. Or you had other companies that were just announcing some type of a layoffs, even though they didn't fire maybe 2-3% of their workforce, and then the stock goes up 20%. Or you also had other companies that were actually just announcing buyback programs, even though they don't have the money to do the buyback over this year. Maybe it's going to take them 5 years to do it. Or maybe their stock is overpriced anyway, but it just kept going up, and it really shielded a lot of the bad fundamentals underneath those companies. And it has been pretty entertaining to look at, in my personal opinion. But the main picture now is actually inflation, because it's starting to surprise to the upside. And this is the US core PCE, which is the Fed's favorite metric. Maybe they're going to change it, but so far it's their favorite metric. It's up 0.6%. Forecasted was 0.4%, which again surprised to the upside. And the Fed officials are not as optimistic as stock market investors in terms of bringing inflation down to 2%. And this is what Fed's Williams said, and pay close attention. He said, "We are certainly committed to returning to 2% in the coming years." He didn't say this year. He didn't say next year, in the coming years, because the service inflation and many of the other parts that makes up the CPI and the core PCE are actually very, very sticky, much more stickier than people believe, which means the Fed has to go higher for longer to break the labor market. So people get lower wages. This is how they bring it to 2%. And I've been talking about it in my videos, and now it's becoming more and more clear that this is what they will likely have to do. Now, looking at the savings rate, which I'm sure most of you are sick of looking at the savings rate, I actually have a different thing that I want to show you today. And this is that a record number of people withdrawing from their 401ks accounts to make ends meet. This is something that Vanguard actually tracks. They track around 5 million people, and they said around 25,000 took a hardship distribution in October, the highest share since the company started reporting the data in 2004. And none of this is actually, again, pointing out to a strong economy. And this was in October. I'm sure now it's much, much worse. And as long as people keep piling up their credit card debt and the Fed has to keep interest rates for higher, now we can look around again and see that nothing is bad, that nothing is happening, that everything is fine. But the problem is going to keep piling up like a snowball. And this is not something that we can easily get rid of, or we're going to see the effects of this snowball falling down later, maybe in 2023. But every single month, every single day, this problem is getting worse. But there's eventually going to be some time where we actually see what's beneath the surface, and we can see all the credit card debt and all the stuff that people actually piled up that they can't really, afford. Now, something else I would show you the weakness of the economy is Domino's Pizza, which they have been offering up to 50% discounts on some pizzas, yet their same store sales actually declined. And, they had a pretty bad earnings. The stock fell 15% and then it fell another 2 to 3% the next day. So again, none of this is pointing to a soft landing. None of this is pointing to a strong economy, which is why I believe the 10-year minus the 2-year pointing to a recession is going to be right. This time is not different, but we're going to find out soon, pretty much in 2023. But looking at the price action of the market, it's starting to follow the fundamentals. And we did go to 39.70, we started breaking down. But as I said before, my level to watch is 39.50. If we do go below 39.50, that would give me more conviction that this was actually 100% being just another bear market rally, that this is not a new bull market. If we go below 39.50, go back in the channel, again, that would give me more conviction that, the bear market is still here, that the worst is not behind us, that we will likely break the October lows and maybe go to 3,200, so we can actually bottom once and for all on fair value with no, emotions, with no, pumping and dumping and all that stuff. Although this might be, wishful thinking, but I believe we're actually lagging some type of a catalyst, because fundamentals are bad, the market is overvalued, the economy is weak, inflation is surprising to the upside, the Fed is going to have to raise more, QT is not stopping anytime soon, and all of this, in my opinion, is just missing a catalyst of something breaking to send us to sub 3,200. Now, we don't know if this will come or when it will come, but again, this is why we have to be, careful with what we're doing in the market. And many of you ask me, why are you doing all those videos? Are you trying to time the market or make short-term predictions? And this is not true. I look at all those things to try to see what could potentially come ahead. If there's more danger ahead, if I should be more aggressive, if I should be more, fearful, if I should hold more cash than usual, if I should just adjust my risk in my portfolio to try to weather any potential storms that could come ahead. I never sell 100% out of the stock market, and I'm not 100% cash, and I will pretty much never be. Me personally and the people in my group, we haven't been FOMOing on the growth stocks. We had some tactical trades which they worked out. I still have my long-term positions that I believe in the long term. I have that hedge I told you about, the 6 months puts on the S&P 500. Now it's up 64% since I started buying it in February. So everything is pretty much working out, and I have a pretty big cash position, as just in case we do go down, which I believe we will go down, I can dollar cost average into the stocks that I like for the long term at much cheaper price, or I can eventually maybe find newer opportunities as we're going down, and maybe I can short and do more tactical trades like I was doing in the entirety of 2022. But this rally has been very confusing to many. A lot of short sellers pretty much blew up in this bear market rally. It made no sense. But again, if we do go below 39.50, that would give me more conviction that the technicals are aligning with fundamentals and we're going into one direction, which is most likely down. So thank you for watching this video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another one.